Ira Epstein of Linn Associates with your financial market wrap-up, and this is for Tuesday, the 7th of May, 2019, 4:46. I just missed where the boards cleaned out on me, so I do apologize. These are the settlements, but we'll go through the charts and get through everything anyways. As it stands, by the way, Vice Premier Liu is definitely coming to the U.S. Well, I say definitely. I don't know, but that's what the press is saying, that he's headed here. As you know, on Thursday night, which is Friday morning, as we get past midnight at 12:01 a.m., supposedly the Trump administration is going to impose the next round of tariffs, taking things up again. Now, they haven't said if they're going to go after another 300 and some odd billion of goods that they'll put tariffs on, but the pressure's on. The question, of course, is what happens from here? And the biggest problem we all have is we're in an unknown. So you're getting these crazy market actions where now for the week we're down 2%, but it's on the daily chart you see more of the action. And any way I look at it, this market's got a rounding top action that's taking place right through there. The market came off today's lows. If you take a look, you were down in the S&P 41 points. At the lowest point, you were down at 2862.50, so you came 28 points off that low. Nice little bounce, but not anything I'm going to give a big surprise. Hey, you did a great job. As I said in my morning subscriber video that I've been putting out, lower highs, lower lows. That is the definition of a downtrend. You'd have to take out 2949.50 to negate that pattern. If you did so, you'd probably be over then the 18-day average of closes, but even if you rally to that 29.49, you'd end up with the lower low, higher high. Now, certainly, if you went up and you made all-time highs, people would say, it's another one of these moves where the market came down, it was the great buying opportunity, and away it goes. But right now, there's a bit of a difference. We haven't been down to these 18-day averages since the end of March, April timeframe. We're back down here and setting up a different type of pattern coming down. The good news is, for the bull, that the market held again the lower Bollinger Bands. So we get to the upper bands, we're failing. We go into the lower bands, we're failing. It's a trader's market with a downside trend to it at this point in time. Should everything let go from this area, the next stop that the market might want to head to is 27.86 the 200-day average. We haven't been there in a while. You haven't been there since March when you got here. And then again, the market took off one more time. If we look at momentum via the slow stochastics, it's down. So who's got control of this market? The bears do. You've got lower highs, lower lows. The bias is down since you closed under the 18-day average of 29.21.50. The problem is we've hit the downside target and the market got a bit of traction down there. It's waiting on the next piece of news. That's all that I could say. As a chartist, the chart is bearish, hit a downside target. I wouldn't be surprised if the bears hit the market again at the 18-day average if they get the opportunity. I see a similar pattern in the NASDAQ. Lower highs, lower lows. Now you take a look. This is how you looked yesterday. Momentum was flat. The market closed at 78.0350. I'm half blind here. And the 18-day average was 77.48. So you had to close over it. The market instead drops right back, hits the lower Bollinger Band, and again stopped. There's nothing magical here. What's going on is you're in a downtrend that hit some first targets. Now the bears are looking for news, or the bulls are going to look for news and say you've come down far enough. Going home, the bears have control of this market. In the Dow, lower highs, lower lows. Yesterday, this market fought a battle, not a bad one, came back and as you can see, went back to the 18-day average right at the end of the day practically, stayed over the Bollinger Band. That was your first challenge of it. This today on the closure at 25.973, and that's under the lower Bollinger Band. Markets only stay above or below Bollinger Bands 5% of the time. There's a problem though. I want you to look at the sideways action. Sideways action is typically where the trend comes from. It doesn't come from the big broad sweeps that are up and down. It comes from the grinding on the sideways. And when a market starts getting under it and it's not oversold, I get nervous. Yes, the market can pop back here, but you'd have to get to scare, I think, the bears. You'd have to take out yesterday's high of 26,518 to scare them. Actually, it was 2 days ago high. I'll take that back. That's the number that I'd be nervous about. If you start falling from here and you don't get any move that wants to pick this market up, the 200-day average of 25,455 comes right into play, and under it, the 100-day average. Yes, I do not teach that you go short under Bollinger Bands. I'll stay with that because more times than not, if you buy over them or sell under them, the market comes back to bite you. There's another way to get involved. When we look at the Russell, it's still the strongest of the indices, and as I said maybe yesterday to you, or I said it in my morning update, it's because it's smaller American companies and it's not involved in the type of trade, and I'm talking just the general makeup of it. What I see, though, is divergence everywhere. I've got momentum turning down, I've got higher lows, higher highs, I have a market that finished the day off still closing higher over the 18-day average, and it's fighting right here, the 200-day moving average of closes. That's your battleground right now. If it slips down, I would expect the first support to come in around the 1560 level, and if that gave ground and this all became a problem area, watch out. What about upsides? Well, at any point we can walk in and there's no trade war, things get resolved, and you can be surprised in the marketplace. In the VIX, since Sunday, I think the pros have held off on the idea of selling the upper Bollinger Band. Why since Sunday? Because they had a chance, because President Trump tweeted this before the markets opened, that he was going to put on the additional tariffs, and I think they held back. Notice how you're back into the 20 level. We haven't done this in a while. It took a while back here to get into that. This is a breakout of sideways action, and this is what I so often talk about. You watch when the market narrows in, it gives you an idea as to what's going on, and that's where you were at. The market had its reversal up last Wednesday, followed through on Thursday, came back down on, this was Friday the 3rd. So the market was still higher lows, higher highs, but it got thrown back from that Bollinger Band. And again, you had the momentum pointing down, the market sitting here with a close at 1287 under the 18-day average. This is, of course, Sunday, and what's the need to jump in? This was Sunday night, Monday, so making it very clear. And now you had a bit more follow-through. I am not saying you're going to go up like you did here, but I'm also not saying that you get a full-blown trade war, that you won't. This is a dangerous time. In the T-bond market, it's still a good amount of buying of fear. But again, you're over the upper Bollinger Band, you're overbought. It is typical to get overbought if the market gets, number one, trying to break out of the sideways action. It's also typical to get oversold if it breaks out to the downside. So this doesn't surprise me. No, I'm not saying the clientele that you buy over a Bollinger Band, but there's nothing bearish on this either. In the T-bond market, 10-year note market, the pattern's not the same. You've got lower highs and a lower low. You've also got a market getting overbought, but over the 18-day average. Stuck in this sideways pattern, very, very difficult. TLT tried to break out, move to the upside today by the close. It closed over the upper Bollinger Band, very similar to what the 30-year bonds did. You can see how the market's got the higher lows, higher highs, overbought. Is this a breakout to the upside? The bonds and the notes are giving you a big warning sign here that if bad happens, these markets can see yields falling on all these instruments. You know, the market's hoping the Fed will be the bailout if we get into a full-blown trade war. In the dollar index, you still have lower highs, lower lows, and you're fighting at that 18-day average of closes and not able to close under it. I'm going to call the market looking for direction. Eurocurrency, with the outside day down, I can say I've got lower highs, but I also have higher lows. Again, that element of uncertainty. The British pound is still in an uptrend. Higher lows, higher highs, hit the past 3 days, 2 days. The upper Bollinger Band pulling back. Support should show up at 130.57. If you take out 130.15, though, you break this whole pattern, and then momentum will probably turn down on you at the same time. I am concerned that momentum right here, the market did get overbought yesterday. It's in the midst of creating it right now when it hit that number, and where does it grab some traction? So far, nothing going on in Brexit to talk about. Japanese yen, like the bonds and the notes. This market is where people run to. It's the safe haven plays. You've got the higher lows, higher highs. This is now 2 days in a row over the upper Bollinger Band. The next resistance is the 100-day average at 91.15. Now, can you imagine if this market, if we get into that trade war, where it might go? Because this is using this as a base trying to break out to the upside. You'd have to get all the way back down to 89.77.5 to show me a rejection of this pattern. Bitcoin, the market acts like a market that has bottomed at the 3,000 level. It's almost doubled in price. You know, people keep fighting this, and more of the big firms are getting into the space. It's grabbing traction. No way to argue that. Now we get to the Brent versus WTI crude. While both energy markets were down today, the fact that the Saudis are going to ship more oil to Asia, that's what they said today, more oil to India. Very, very important. Now, I don't know if it's just the Saudis or if it's going to be parts of OPEC, but more oil coming to market, and that put pressure on the market. You've got lower highs, lower lows. Yesterday, not today, you hit your lower Bollinger Band. You got a small bounce away from it today, but the trend remains to the downside. You'd have to take out yesterday's high, which, by the way, was an outside day up, and you now are falling right back to that Bollinger Band. Again, trying to catch some of these markets. There's a time when you take money off the table or you don't know what you're doing at some point because the outside influences change so fast on you. Brent certainly falls into this category. When you come to the WTI, lower highs, lower lows, but getting oversold and riding that lower Bollinger Band. Is it going to be able to keep pushing it down is the question. In order to negate the downtrend, you got to get back up, I think, over actually 63.84. So this market's looking pretty heavy. Gasoline, wow, look at how fast it's given up this 207 level, and you're right back to 190.56. But you're under the lower Bollinger Band. I don't know that I'd call that sideways action. I think you're oversold and you're getting to an area where you might see the pros. In fact, I think today they began taking the money off, along with possibly yesterday when you challenged that band as well. In the nat gas, it's still a market that's lacking the weather, and that's what this market looks at. It's not really about world exports. It's not going to be really about, at this point in time, anything but weather, 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 and that's what I'm looking at in this market. It is trendless. It's got a higher high, lower low, flat momentum. So is it a confusing time? Let me share this with you. Unbelievably confusing. And I'm writing about it, and I'm trying to keep up with it in my nightly and midday updates. And as I do it, I start off in the morning recording all these different charts. I do 45 charts in the morning. I'm not in that video. I'm at my computer. I've got my headset on, and I'm talking. This is how those charts look. There's a lot more studies than you see right here. We're also adding a feature on the bottom of that where very soon you'll be able to put your cursor right over the bottom of the recording. It'll tell you what section. So I cover all the energy markets. I cover just so many different markets for you. It's one after the other. Every sector in the futures markets is covered. If you'd like a free trial to what I'm doing, and it includes, if you'd want, nightly audio and midday audio, how do you get it? Well, call my staff. If you haven't tried it, I'd love to put it in your hands. You can also go to our website, sign up for it there, or you can click right here. You'll see a lot of new features coming on very, very quickly as we're working through all this. It's pretty lot to do, but I am really concerned about these markets because they're difficult to trade right now. I'm Ira Epstein. You have a good day.